All right, traders. Also, keep in mind that the ECB meeting minutes are coming out right now. So let me. The euro actually popped up following some of these meeting minutes. So let me. It's not moving the market too much, but we're getting a little spike up here in the euro. Let me read some of the comments that have come out. ECB accounts could mull limited phase of HICP overshooting. Inflation overshoots. Council also says debated whether preemptive action is preferable. Also, the ECB says low energy prices generally supportive for EMU growth. And ECB also says role of FX rate and policy transmission has weakened. So they're not worried as much about the euro at these levels. Okay, and that seems to be all. The downside risk to euro area economic outlook have increased since December. And I guess this has caused a little bit of a move in the euro dollar, but not a whole lot. I mean, we've seen a little bit of a move, but nothing too big here. All right, now do you guys mind if I talk a little bit before I go into the morning analysis? Talk a little bit about a pet peeve of mine. Moby, I'm going to call you out right now. Hope you're listening. Moby wrote to me. He says hello. I'm going to give you a pet peeve of mine, okay? You ready? I'm going to beat you up a little bit. Moby writes to me and says, Guppy, question mark, question mark. Listen, if I'm going to take the time to give you free analysis, I would at least expect in return for you to take the time to ask a question regarding a currency pair of your thoughts of why you're asking it for me, or asking it to me. Okay, so let me say, like, if you're asking about the Guppy, could you please at least say, hey Blake, I'm looking at the pound yen or the Guppy. I'm looking at it as a possible long, or looking at it as a possible short. The reason why is this. Could you take a look at it? Thanks. When you give me a currency pair and you say the Guppy, question mark, question mark, what am I supposed to do with that information? The reason why I say that is because I can tailor my answer either way based on what you're looking for, but I don't know what you're looking for. Maybe you're more interested in hearing what I think about it because you don't have a position, and if that's the case, then be clear about it. Because if you say, well, I'm long the Guppy, what do you think? I can look at it and say, oh my God, that thing looks extremely bearish. If you're long, you got to be really careful here. Or if you're short the Guppy, I still see the same thing, and I'll say, oh, hey, you're short. It looks pretty bearish, and if you're short, you got a pretty good price. If it were me, I'd probably continue to hang on to that position because it still looks pretty good to the short side. But do you see those are two totally different answers based on what you think it might be? Does that make sense? Okay. He said, because when I come back and I reread these questions, that doesn't make any sense to me. I'm asking as a favor, okay? Yeah, because I broadcast for 3.5 hours a day of my life. I don't ask for anything in return. Matter of fact, most of you don't even know who I work for. I would venture to guess that half of you don't even know the company I work for. I don't pitch you all day. I don't, tell you, with WiseTrade, you all should be WiseTrade. I don't do that. I just do analysis and then I leave. You guys can come and go as you please. I don't, we don't bombard you with email, solicitations, or I don't pick up the phone and have our salespeople call you or anything like that. So just out of respect for what I do every day, if you could do me a favor and just type out a little bit of a explanation of what you're looking for or what your thoughts are, that I'd appreciate that. All right, thanks. And believe me, I appreciate you being here anyway. So, but I'm using you as an example in particular. Okay. Esther says it's WiseTrade. Well, you've been here for Esther, you've been listening for 8 years. You can't. That's not. Of course, after 8 years. All right. Let's get into the analysis. All right. So, Well, I guess the logo is here, right? I guess it'd be hard not to know. And the logo is here too, but it's just a W. But I guess it is. It is right here. All right, let's go into the analysis. So let's go into the euro dollar. So yesterday, what was the support? What was the support that we wrote down yesterday? Our first level of support. Do you recall that level? 110.90, right? What's the low of today? 110.90. Remember, we did this analysis yesterday. We're here and we just bounce from it. So that support is obviously key. Now, I agree with what Paul Franco said a little bit earlier, that that the one, excuse me, go back over the chart. So I agree with what Paul said earlier, that that 110.50 is, you know, looks quite possible at this point. And yesterday we wrote down two levels, which I'm just going to write them down again. 110.50, 110.90. It's the same. It's the same. It's the same thing that we wrote down yesterday. Okay. But the reason why I think 110.50 is going to be that price is, you know, you can see the euro hasn't gone anywhere. I'm happy I got out of it yesterday. I got out of it yesterday like 111.30. You know, maybe 111.40 actually, because I bought it at 34. I think I sold it at 44 somewhere yesterday pre-minutes. So I made like 10 pips, and I lost 14 in the cable. So I just got out of them just for the sake of not having any exposure during the FOMC meeting minutes. Anyway, so here we are trading at support. I really think that the downside could be tested. Now, the risk that the euro has right now is what I said earlier, and I know half of you weren't listening. You know, there's a few hundred people that weren't listening actually, you know, 30 minutes ago when I said this, so I'm going to say it again. The risk right now is that the risk is that the dollar yen starts to pull back, and if that starts to pull back, that dollar weakness might feed into the euro dollar and make it, you know, start to find some sort of support. Now, that level I'm hoping is going to be down at 110.50. Remember, it's okay to hope when you're looking for a trade. It's not okay to hope when you're in a trade. It's just, but I'm hoping that the euro dollar does this. I'm hoping we break through the support here and we crack through, and then we can bounce right here. That would be great. You know, maybe following the data this morning, you know, we get a little boom, and I'm hoping that to be the case. I may be wrong though. This low that we put in here might just be it. Okay, but I'm hoping this is what happens. It is a 38% retracement of the very low to that, you know, when we tested the underside of this trend line high. So the 38% retracement is also the breakout point here from December. So Paul thought there might be a little bit of an overshoot. Hey, there's always a risk of an overshoot. You have to anticipate that when you get into a trade. You know, if I bought it at 110.50, I don't expect it to stop right where I bought it. I mean, I'm not that good. You know, no one's that good. So, you know, I expect if I get into a trade, I'm going to have to give it some wiggle room. And Paul's like, yeah, I could go to, you know, 110.29. It could go to one. I'm like, yeah, it might. And if it does, I'll expect it. So if I bought it at 110.50, of course I'm going to have to give it some wiggle. I'd probably give it below 110. You know, I mean, my stop would automatically be at 109.50, but I would probably even let it wiggle below 110 and still hang on to it. You know, because there's a lot of, you can see right through here, there's a ton of you know, support through here. So you know, even if we came through 110, I would still let it wiggle. But anyway, I think that 110.50 is going to be a place to get long if we can get down there. Now, resistance today, it's going to be a little trickier. We wrote down yesterday at 111.90, I think. I venture to guess that that's probably still going to be pretty good resistance. You know, on any rally. The euro dollar is really struggling at this moment, but I think that could potentially change should there be some risk aversion. Should the dollar, should gold start to rally, which I think gold's at a spot, guys. that, to me, looks like it wants to bounce. Okay, it really is. And so if gold really starts to bounce, I think the risk is that the euro starts to, you know, reverse as well. Now, you can also do something like this just to get a little bit of a jump on the trade, I guess, is a move above one. Oh, damn it, that didn't come out the way I wanted it to. 111.50. Let me go grab the line here. 111.50. Okay, I can write down two levels because I think if we can get above 111.50, it's going to kind of kickstart the move. Then we get above 112. 111.90, 112. That's really going to accelerate. So, it's interesting. We had Nick, and by the way, the euro's on its lows. It's really on support right now. We had Nick trades on yesterday, and she said something really interesting, which is completely different than the way I trade. I tend to ease my way into a position. I very rarely will I buy a full-size position just getting in. I tend to buy, a quarter size, half size. Once I'm confident the move is happening, then I'll average into it, feeling confident that it's moving in the direction that I want. Or if I'm doing like what I call a Fibonacci fade, when I think something's coming through into support, and I'm going to buy a couple pieces on the way down. That's the way I do it. Nick was saying yesterday she tends to buy a full-size position and then parse it out after that. A different way of trading. I'm not saying it's the right way or the wrong way. I'm just saying it's a different way of trading, which is interesting. Like what I'd be looking at here is if we got above 110.50 or 111.50, excuse me, I might buy a little bit and then add a little bit more above 112, knowing that the momentum. Hold on, really quick. Knowing that the momentum was really going to be moving back towards that 113 level. So if I bought a little here and then I bought more here, my cost average would be here, and then I have good momentum where I capture a full-size position for this meat of the move. Again, just a different way of trading. Not saying my way is right, hers is wrong. It's just a different way, and I respect it too. It's just not a way that I tend to trade. Again, doesn't make anybody right or wrong at all. So I'm going to write down 110.50 and then 111.50, excuse me, 111.50, I should just write 112. I know yesterday it was 111.90, but we're still range bound. I'd put us back in a range yesterday. The cable's surprisingly strong today. Now there's an EU summit, and there's some comments from some of the ECB members about I'm sure they can work out a deal. The problem with the cable at these prices is it's going to see a lot of volatility. Okay, and it is based on Brexit fears, concerns, rejoicing. You're going to get a lot of volatility, and I think that's just going to be part of the territory when you're trading the cable. So when you're dealing with the cable, just realize that you could if you have an overnight position, like look, I'm long the pound New Zealand, pound Canadian, pound Aussie. Those are all really small positions, and I have a short pound yen position, and it's small. I woke up this morning and it was very mixed. The pound commodity currencies did pretty well. Pound yen came off a little bit, but I expect that type of volatility when I'm dealing with the cable, just because it's you have comments about the Brexit, you get this big squeeze higher. People go, oh my God, UK is not going to bow out of the eurozone or whatever. You're going to get that type of volatility for the next several months, next couple of months, whenever the referendum vote is, but. So anyway, that's what created that move higher in the near term. Now, what that did for us is we pushed through the 143.50, which has been a big sticking point for the cable a lot. We had a false breakdown, what I thought was going to be a triangle. We actually did a false breakdown, which pushed us right back up again. The bottom line with the cable is it's extremely choppy. I would say that your first line of defense, if you're short, is going to be 144. Okay, 144 is obviously that held us pretty well, and we're just going to have to look at these lows at 142.30, and that's it. I mean, if we knock our head above 144, it's probably going to squeeze back to 145, and we're going to probably struggle, up here, as we make our way up here. But just be careful with the cable. I think that chasing it is not the right decision. Chasing, and by the way, the Euros had new lows. So we can go ahead and mark, we can take this off. I didn't think this was going to hold anyway because we were already testing it, but 110.50 should be key support. I'm going to buy it down there just to let you guys know. If the Euro gets to 110.50, I'm a buyer. So 144 and 142.35. And what I was saying about the cables, just don't get caught chasing it. You know what I mean? That's like the key. If it's screaming higher, don't you may even consider fading it. But like if I was going to trade the cable today, like the pound proper, not the cross rates, like if it was screaming up to 145, I'd be a seller right here. I'd let it scream higher, stick a nice wick there, and then reverse it. You got to trade it that way. It's the way you have to trade the cable in this environment. It's not always going to be that way, but that's the way it is right now. You shouldn't be listening to me about the cable anyway, because I really am probably my worst currency pair to trade ever. If I would say if I had to go back and rehash the last 14 years of trading FX, since when we could start trading spot forex in the U.S., 14 years ago without being an institutional client, I would probably say that if I had to go through every one of my trades, and it took me, that would take forever, but I'd venture to guess that the pound is on the bottom of the list of my, most profitable, possibly, losing positions, if I had to go through them all. And if you've never seen my video, well, now the Swissy, on the other hand, I love the Swissy. I'm a little bummed out that I'm not still long. I was getting harassed by some of the guys in my chat room, like, who's that guy that got out so early? I got out right here at 98.60, and here we are at 99.50, almost at the 50% retracement. Now, we should find some resistance here. I think this is, we're going to probably fall short of parity, but the Swissy, extremely strong. This is a currency, as you guys know, I do not like to short it. I refuse to short the dollar Swiss. Okay, I refuse to short the dollar Swiss. I refuse to play the Swiss on the long side, because when the Swiss National Bank has their rates at a negative -3/4 basis point, I'm just not going to fight that. I ain't going to do it. So I only play it to the long side. The Swiss pairs to the long side, meaning short the Swiss franc. That's it. And if I can't find an opportunity to buy it, on a dip like this, then I'm not going to trade it. I would say that any move, especially if you start to get a rally in gold, and you see a rally in the euro dollar, any pullback to this 98.20 is going to be a great opportunity to be on the long side. Problem is, I don't think we're going to get anywhere close to that today. I think we'll be lucky if we can retest this support here, which will come in at 98.90. And I think that right there is going to really, that would really hurt the, wait, where am I at? 98.90, right? That if we broke through that 98.90 level, that would shatter some of the confidence of the bulls. If we broke through here, that would expose a move down here, which I would be a buyer. If we could do that, if we could, break through here, I'd love to be along right there. Now, it looks like to me that we're heading towards this 99.80, which I think is going to be key resistance for bulls. Okay, we are in a range. As much as I like to be bullish the dollar Swiss, it is still in a range environment. But if you look at the longer term, developments, as long as we are above, this blue line here, I'm a bull. So I don't. Here, let me get rid of this. As long as we're above this blue line, I'm a bull. Period. End of story. I hope to God we just dip down. I know I bought it here a week and a half ago. If we dip down here at 96 cents, I'd be a hand over fist buying the dollar Swiss if we could get down there. We might too. You know, we could do this AB equals, you know, CD. That's entirely possible, especially if you think about, like, you know, Nick, what she was talking about yesterday. You keep it real simple here. If we do an AB, CD, and then we can get long down here, that'd be awesome. So it's going to be interesting to see if we turn here in the next couple of days, you know, up here, and we could do this, something like that, and buy it down here. I'd be so happy to do that. I'm hoping that happens, you know, but that's way far ahead. I'm not a palm reader, nor a, you know, I'm not a palm reader, you know, weather forecaster either. I don't know if that's going to happen, but boy, that would be a great trade if that happened that way. We'll see. It'll take us a few weeks to do that. Let's go over to the dollar yen. Now, the dollar yen. As you guys know, I'm already shorting dollar yen. My cost average right now is 114.16. Okay. We might be in a flag pattern here. We might be. You guys know that I drew this green box out for you guys last week. And I said, if we get into that green box, I'm a seller. Okay, and I sold it Monday when we were on our holiday, got out of it Tuesday. I sold it again yesterday, and we're starting to make our way out. And I already gave you guys my argument. If you guys came in a little bit late and you missed my argument on why I'm shorting the dollar yen, just under the underperformance of the dollar yen versus the S&P is my answer. Okay. Now, if you look at this, you say, "Hey, Blake, is that a flag?" I don't know, but I'll tell you something. If it is, the targets are in line with a head and shoulder pattern that we're currently, in. Shoulder, head, shoulder. Okay. Am I worried about BOJ intervention? Yeah, that's always a risk. It's always a risk. And as I told you guys yesterday, as long as we stay below 116, I have no problem being short the dollar yen or being long yen. And it could happen. BOJ intervenes, thing screams up 200 pips. I'm prepared for it. It's doable. So anyway, but for right now, where we're at with the dollar yen, resistance is 114.90. Support, really key support today, is 113.30. We break through 113.30, and I think the downside starts. So 113.30 support. I'll just write down 115 is resistance, and I still have an order to sell. It hasn't been, whoops, this is bearish. It hasn't been deleted. I still have an order to sell the dollar yen at 115. Okay. So anyway, there's the dollar yen. When I come back, we'll do the Canadian, the Kiwi, the Aussie. I'll get caught up really quick when I get back, so I can answer some questions. Don't go anywhere. Thanks everybody for being here. I'm gonna go get some more coffee. Thanks. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. So we're gonna wrap things up really quick. So let's go over to the U.S. dollar Canadian. So I have to, okay, before I go over to the dollar Canadian, let's look at crude oil. So really quick on crude. See this crude oil chart, it looks bullish to me. Obviously we got this little cup and handle pattern trying to break out. Let's go over to the 4-hour chart. Let's delete that for a second. Let's delete this. I'm getting rid of some of this stuff. Okay, there's the daily. So we can see the fibs there. Let me remove those. We don't need them right now. Okay. Now let's grab, okay, see this trend line here? Okay. We are threatening a break higher here. So into the 4-hour, let me do something really quick. Should be an 88% retracement, 78%, close to. So if we break above 32 bucks in crude, Okay, it's going to be extremely bullish. And if that's the case in crude, if we break above 32 bucks, so obviously we got crude oil inventories a little bit later. That's going to be an influencer. Because I'm going to have to watch my pound Canadian short if that happens. The dollar Canadian should break down. Okay, it should break lower. Now this is really critical support here. 136. Do you see this? Go over to the daily chart. See this trend line right through here? Comes right through there. 136. Huge support. And now I know trend lows are at like 136.30. I understand that. But I think very important support is 136. And if we break through that, we have a nice little pennant working already. We break through the support, we're going to be trading down at 131, 130. I got asked this yesterday. Hey Blake, should I be buying it here? And I'm like, nah, I don't have enough information to be a buyer here. I'm not convinced that crude's going down. If crude's going down, then I'm thinking that the dollar Canadian's going to bust higher. And I don't have any dollar Canadian exposure. I'm short some pound Canadian, or I'm long some pound Canadian, so I guess realistically it'd be nice if we bounce here, but I'm not 100% confident that's going to happen. All right. We have 136.30, but I think 136 is going to be really key. Now, resistance on the way back. Let's remove this for now because it's not in play yet. Yet. I say yet. So right through there. So I think any rally to 138 is probably going to be capped at this point. It's not great resistance, but it should be resistance on the way up. We are in a range for now. Okay. Kiwi. Now the Kiwi had weak producer prices yesterday, and that turned the Kiwi lower. Kiwi's really choppy here. As you guys know, and I know I've said this a lot, and I'll say it again, I'm not excited about these commodity currencies at all. This 50% retracement's holding. I'm really not a fan of the 50% retracement. I know it's some people's favorite retracement levels, but it's not my favorite. One of my least favorite, actually, because it's not even an actual fib. It's just people incorporate it in a fib. So because it's so commonly used that now it's more or less regarded as a fib level, but it's really not even one. But anyway, the 50% retracement's holding. So any rally to 67 cents is going to be a problem. Any fall to 65.50 is probably going to be well supported. I'm not excited about the Kiwi at all. I'm not excited about the Aussie at all. Whoops, 65.50, sorry. Okay, 67, and we are range bound. Okay, let's go over to the Aussie. Okay, here's the Aussie.
Hey, Blake.
Yes.
This is Steve. Just a quick note on that 50% retracement. A lot of that happens because of futures, not so much of Forex, but futures, and that's why a lot of traders pay attention to it. So, so it probably has a more minor effect on Forex currencies and stuff, but it's a real thing in futures trading because of news events and the way that it'll move, retrace 50%, and then move again.
Great, appreciate the input. Yeah, I never have been throughout my career before I traded currencies just a big fan of the 50% retracement. But there's going to be certain markets that it's probably maybe in the futures market it's a lot more respectable.
Yep. Just thought I'd pass that along.
Thanks, appreciate it.
Yep.
Good morning to Steve Bealby. That was Steve Bealby, by the way, who does the midday market update. So here's the Aussie. You can see I'm very uninspired about the Aussie as well. I really have no desire to trade this one either. We did have weak employment report, but the Aussie is actually still holding up pretty well against the Kiwi, surprisingly. But anyway, 72 cents, and I would say by the time we get down here, 71.70, 71.60 if we get down there, so right through here. Again, I have zero interest in trading the Aussie right now. So what was that? 70.65, right? 76 is 70.65. I didn't draw that correctly. 70.65. Okay. 765 and 72, and we're in a range. Okay. Now let's take a real quick look at the dollar index. So here's the dollar index. See, this is one of the things that bummed me out yesterday. I mean, the FOMC minutes came and went. We had this nice little wedge and nothing. It's so uninspiring right now. I know I hate to be a Debbie Downer like that, but really it's like, okay, now what do we do? You know. Okay, so resistance for the dollar index is going to be 97, roughly 97.10. I mean, we're basically at 97 cents right now, so 97.10. It's resistance. 97.010. Support. I mean, look at this tight range here. I mean, $96.65. I mean, how excited do we get about that? You know, we don't. That's the thing. Okay, we'll take the peso. The damn Banco de Mexico really irks me. Really, really irks me, because you and me and, you know, those of us that traded the dollar peso, we had such a great price. Such a great price. Short at 19.22 was my cost, or 19.22. Yeah, I think right here. And then I got out at 18.85, like a bozo. And then this happens, of course, a couple of days later. Fantastic. Anyway, yesterday, if you missed the analysis yesterday, I'm actually quite happy that we didn't hit new lows, which means that this 18 is extremely strong support. What I am looking for is and I drew this out yesterday, and this has not changed. My attitude has not changed about this. If this market shows a little risk aversion, we might get a bounce back in the US dollar Mexican peso. I have two orders to sell. I have an order here at this is the if you can't see here, let's get rid of this. Okay, at the 38% retracement and the 50% retracement. Okay, if we get up there, I am a seller. I'm hoping we get up there. All right. So right now our first level resistance is going to be this 1855, and then supports 18. And if the market continues to rip higher, we're probably going to end up dipping below this 18. And I'm going to be pretty bummed out that we do that. But 18, strong support. They're intervening, obviously. So now I just want to, I want to, you know, here's the thing. Let me. I think that's yesterday's move. Put them back in a range. So, here's my attitude towards the U.S. dollar Mexican peso. If you short the U.S. dollar Mexican peso right now at current prices, which is 18.23, and I think if you closed your eyes for like 2 months, you're going to be happy you did that. Because I think in 2 months' time, we're probably going to be down here like 117, 117.50, maybe even a little lower, depends. Okay, I think in a couple months' time, we will be somewhere down here. Okay, so the question that you're probably asking right now is, well, Blake, why don't you just short it right now and just forget about it? I could, but I still think it's possible that we get better prices before moving down. And I'm hoping, again, here comes the hope. I'm not in the trade. I'm hoping we can rally into the zone first before this happening. And that's why I'm hoping to get a better price before it breaks down. Because if it breaks down, I'm going to have to just chase it lower. And I don't like chasing prices. But the Banco de Mexico's moves yesterday really suggest that that's going to happen. And I want to participate. I'm just trying to exercise some discipline here about not chasing it lower. You know, hopefully get a rally back a little bit. And if the market goes risk off, we'll bounce. We will. The question is, how aggressively are we going to bounce? And I'm assuming we stop somewhere around here. All right. The U.S. dollar, Norwegian krona, U.S. dollar, Swedish krona, they aren't doing anything. They're just dead in the water. Both of them, just dead. So I'm going to keep them off the bias chart for now. So there's your bias chart. Go ahead and take your picture or record it, or write it down, and let me answer some questions. All right. So the first question that comes in from